What do you make of that, to hear the quiet bit out loud?
Well, basically, I think that you have a situation where the, quote, successful Volcker disinflation is actually, becoming more permeated in the market. One of the factors, obviously, is that if you equate this to an automobile race, when they came out of, Jackson Hole, what was really signaled was that the green flag wasn't being waved, so the need for risk assets was definitely not going to be waved into portfolios. The need for a checkered flag declaring victory on inflation was definitely not going to be waved. The race was not stopped, meaning the black flag wasn't waved, and nor was the last lap with the white flag. What we found ourselves in was with the yellow flag of caution, and we're going to likely end this race for a longer period of time. That means that this race will be finished under the caution flag for most investors. And so while you're looking, and many investors are looking for a reason to be bullish, really what we have to do is take a longer term view in terms of where that calibration happens. And that successful disinflation that Jerome Powell highlighted means that they're going to be on this course, as we know, for a very long time. In fact, I think one of the conditions we find ourselves in right now is that the tightening financial conditions that we've witnessed so far, although many people would believe that there's more to come, reality is that in calibration with what we've seen in the global financial crisis, we're seeing some of the tightest financial conditions now than we've seen since Lehman Brothers at that point in time. So there is some appropriateness to where we think the market is right now. And while there might be some deterioration to come, especially if you have growth deteriorate further into the later part of this year, we do need to be a little bit more cautious. Obviously, rates have been the massive recalibration element in that tightening process over the past few weeks.